The sole purpose of this channel is to find assets that can provide life-changing returns. And so you may wonder, why are we looking at an asset like blue sky uranium? Look at its flea-bitten chart. It's gone absolutely nowhere for years. But the truth is, the people that look at charts for guidance on what an asset could do would have faded this asset back here after it plummeted from $100 down to $4 because they would have said it's an ugly chart, don't buy it. But then they would have missed the move from $4 to $75. That is the explosive potential nature of these assets. And so we have to stay on top of them regardless of what the chart looks like. There's thousands of examples of charts that look terrible like this that ended up providing their investors with life-changing returns. What makes uranium miners special is that they control the fuel that's going to power the nuclear renaissance. Nuclear energy is needed for artificial intelligence. It is needed as the baseload power source for the future of humankind. It is going to run everything. Humanity is still in the early stages of the adoption of nuclear. Uranium is in a multi-decade supply crunch. That's how scarce it is above ground. And so the assets that control it, the assets that are high quality, can provide life-changing returns. But to start, right now, the chart looks terrible and miserable. Market cap, $28 million. Earnings, negative, right? So right off the bat, not ideal. But let's see what this company is all about and if they can sell themselves as a viable, potentially life-changing investment. Let's talk about their biggest project, the Amarillo Grand Project. The Amarillo Grand Project incorporates a series of uranium vanadium discoveries made over 15 years along a 145-kilometer trend covered by 300,000 hectares of mineral rights. And so this map gives a depiction of the project. And so in red, we have a proven uranium deposit, the Ivana deposit. In gray, we see uranium vanadium mineralization. And in green, we see the part of their projects that have been surveyed. And so let's dive into the Santa Barbara project. First uranium found in the Rio Negro Basin. Widespread uranium and vanadium on surface along 11-kilometer trend. That is very, very, very positive. That's what they mean by uranium vanadium mineralization in the Santa Barbara project at this gray dot. Then they have the Init discovery, which shows a 15-kilometer airborne radiometric anomaly. So again, a good sign if you're looking for uranium. Then we have the Ivana area discovery in red. So this is a proven uranium vanadium deposit. And so let's get an update on what the Ivana deposit is all about. And so it is total indicated uranium of 19.7 million tons and total inferred uranium of 5.6 million tons. That's a lot of uranium. And so let's look at their 2024 preliminary economic assessment. This is what it's all about. What is the value of these mines? This is based on proposed surface mining operation, no blasting, economic highlights, base case, net present value, $227 million. But here's where it gets a little hairy, right? Pre-production capital cost, including $35 million contingency, $160 million. So it's going to cost $160 million in pre-production costs, right? They're going to have to raise some money. Sustaining capital cost, $27 million. So it's going to cost a lot of money. So even though the mine is worth $200 million, and that's factoring in the cost associated with the mine, they're still going to have to raise a lot of money to get it out of the ground. But here's the good news. Average total cash cost net of credits, $23 per pound. All-in sustaining cost, net of credits, $25 per pound. The spot price of uranium is like $80 per pound. It's going to something like $100 per pound realistically. That is a massive margin. Imagine having a mine that produces uranium that costs $25 per pound that you can turn around and sell for $100 per pound. That is a massive margin. That's probably why the net present value of this mine is $228 million, because it is a super low cost producer with huge profit potential. And so the upside is they have a mine worth hundreds of millions of dollars. The downside is they're going to have to raise a lot of capital to get it into production. But here's the truth, right? They don't own the full mine. They're entering into a strategic agreement to fund advancement of the Ivana deposit with carried interest for BSK and exploration at Ivana sector targets. So they're partnering up with a massive company. There's an earn-in agreement between Abater Spain and BSK Argentine subsidiaries. Abater Spain, COM, and BSK Argentine subsidiaries. COAM will spend up to $35 million within 36 months to earn up to 50% indirect interest in the Ivana deposit. COAM can earn up to 80% indirect interest by advancing the Ivana deposit through to completion of a feasibility study and funding the estimated capital cost to achieve commercial production of $160 million. Blue Sky will most likely only own under a 20% interest in this mine. The mine at this point is worth $200 million. Blue Sky will have, let's say, a 20% stake in that mine, which would be worth something like $40 million. The market cap of Blue Sky is like $29 million. So it's slightly undervalued, but I would say fairly valued at this point because there's lots of risks involved. Now, obviously, this is where it gets exciting. Uranium's in a multi-decade supply crunch. The spot price of uranium is expected to skyrocket. As the spot price skyrockets, the value of this mine skyrockets. So if the value of the mine goes to $1 billion at a spot price of $200 per pound or $150 per pound, and Blue Sky owns a 20% stake in that mine, then Blue Sky's equity in that mine is worth $200 million if the mine is worth $1 billion. If they own 20%, the mine is worth $1 billion. Blue Sky has $200 million of equity in the mine. That would be a 10x move on the price of this asset. So I would say this is a safe asset. It is a leveraged bet on the price of uranium. It has big partners, and there's exploration potential. So as the value of the mine goes up, which it's expected to over time, this asset can skyrocket. It can 5 to 10x over the next few years. It's all based on the value of the mine and the spot price of uranium. And again, there's lots more exploration potential for this mine. So overall, I would say it's a solid asset with plenty of upside if the uranium spot price moves. Let's look at their balance sheet. If they're drowning in debt, none of this matters. How healthy are they financially? Well, they have total current assets of $1 million and total current liabilities of $924,000. Very interesting. So they're going to have to raise some capital, probably issue shares into the market. This is probably why the stock price has done terribly, because they've, in order to fund and get to this point in the uranium winter, they've had to issue shares. So yes, that's what they're doing. In the last 12 months, cash flow from net common stock issuance, $3 million, right? So it's been very unfortunate to be a holder of this in the uranium winter, but can this asset 10x as the nuclear renaissance picks up? Absolutely. It did it before, and it's most likely going to do it again. So a very, very, very interesting asset, high quality play, obviously very painful in the uranium winter. It's a leveraged bet on the uranium spot price. Obviously anything can go to zero. But if you're looking for a bet on the uranium spot price, this asset has it. Fairly valued right now, but if the spot price rises, their exploration rights, their mining rights should also rise. And this asset will deserve a premium on its exposure to one of the most valuable resources on the planet. I would say it's a relatively safe investment. Now, if the nuclear renaissance takes longer than expected, expect more pain. But for now, a very, very interesting asset. Not financial advice. Do your own research. Anything can happen. We don't know if their partners are going to pull out. Lots of unknowns. But based on everything available today, looks like a quality asset.